Hello and welcome to the European Open briefing for Monday, October the 22nd. I'm Andreas Georgiou, investment analyst at xm.com, and together we will predominantly be taking a look at the main developments in the currency markets, focusing on some of the world's most traded pairs. So the dollar index is moderately down on Monday after finishing the previous week on a positive note. Though I should say that last week's gains came on the back of weakness in other currencies, in particular the euro and sterling, rather than dollar-specific factors. We'll look at dollar yen and the drivers for the pair, then we'll turn to euro and sterling. We'll see how those are favoring against the greenback. And lastly, today's economic calendar. No important releases are coming up in the remainder of the day. Moving on to our performance table, on the bottom we have the dollar index, though its losses are modest. On top we have WTI oil. The looming US sanctions on Iran that are set to go into effect in the first week of November are supporting oil prices. This action would weigh on supply. Further below, it is evident that the euro is outperforming, though its gains are not considerable in nature. Over here we can see the dollar index and the dollar yen pair. The index is in purple. It is down on Monday after gaining 0.5% during the previous week. We have no market moving US releases on Monday, so maybe it is worth mentioning what is coming up over the next 5 days. Of importance, of course, will be the advanced estimate of third quarter GDP growth that's due on Friday, while also of significance may be Richard Clarida's address on Thursday. This is the new vice chairman of the Federal Reserve, and he will be delivering his first major address on Thursday. Specifically, he'll be talking on the outlook for the US economy and monetary policy. Now turning to dollar yen, it is heading higher, further distancing itself from last Monday's 111.61, which was the lowest since around mid-September for the pair. Now safe haven flows, or the lack thereof, are the name of the game for the yen. In this respect, Sino-US tensions remain on the table. The US-Saudi dispute over the murder of journalist Khashoggi, and also Brexit and Italian politics remain in the background and could divert safe haven flows to the Japanese currency. We'll touch on the latter two in the following slide. While I should say that on the China-US trade spot, according to the Financial Times, White House economic advisor Larry Kudlow accused China of doing nothing to diffuse tensions ahead of a likely meeting between Presidents Trump and Xi at the G20 summit in Argentina next month. Moving on, over here we can see the euro and sterling. They both retreated last week against the US currency. The euro is on top. Angst over Italy's budget plans and a potential clash with EU officials acted as a drag in previous sessions on the euro. The common currency will remain sensitive to, or rather I should say it's expected to remain sensitive to developments on this front. Related to this, Rome has until today to explain the situation to Brussels over its unprecedented breach of EU fiscal rules, according to the European Commission. Elsewhere, Moody's did downgrade Italy's sovereign rating on Friday, though it did not push it down to junk territory, and this was interpreted as positive by markets. It boosted sentiment on Italian assets. We have a notable move down today in 10-year Italian government bond yields, while Italian equities are also outperforming on Monday. Turning to the British currency, last week it retreated. We had some disappointing data on retail sales and inflation, while we didn't really have a Brexit deal as maybe it was expected in the beginning of last week. Brexit updates will remain in focus. Prime Minister May reportedly willing to drop a key Brexit demand in order to strike an exit deal helped the pound on Friday, while UK Brexit Minister Dominic Raab said on Sunday that Britain is open-minded about extending the post-Brexit transition period if this would mean the EU would be more constructive on the Irish border issue, thus helping the two sides come to an agreement. And on to today's calendar, we have no market moving releases, just some Canadian wholesale trade data. And in light of this, allow me to take the opportunity to say that there was a notable rally in Chinese equities today. The Shanghai Composite advanced by slightly more than 4%, while the Hang Seng in Hong Kong added more than 2%. Verbal support by Chinese officials and plans to cut personal income taxes were instrumental for the move up. That's it for today. Thank you very much for watching and have a great day.